Eventually, a debt market implosion is going to happen. We were just, and we still are in many ways, on the precipice of that. Is it over? I don't know. We did see some intervention here by central banks. They got to keep it going. Otherwise, this will implode again at a time of their choice. It's so simple. An implosion of the debt market, which is going to happen, and by design, this is no comedy of errors, why we're here, or by accident, is going to melt down stock markets of the world.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 13th through January 20th, 2025, while supplies last. This week we feature the 1-ounce Canadian Silver Falcon coin at just $2.75 over spot, the lowest price we've had on any sovereign coin in years. We also have 90% constitutional silver or junk silver at just $1.69 over spot per ounce. We also have the 1/10 ounce UK Gold Britannia coin at just $29.99 over melt. And finally, 1-ounce gold Canadian maples are just $59 over spot. Again, one of the lowest prices we've had on gold sovereign coins in years. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this wildly popular returning guest. Gregory Mannarino is a trader's coach. He's also written books to help people with both trading and understanding the role of silver. He is the founder of traderschoice.net, and he's joining us today, Wednesday, January 15th, 2025. Gregory, thanks for coming back on Liberty and Finance.
Thanks for having me, bro. Love to be here.
You keep people apprised of the what's going on in the markets with your before market opens and right after it closes, daily commentary, as well as one on the weekend, to keep people in the right positions as the drama unfolds. And it certainly is being very dramatic recently. We're going to be talking with you about the incredible risk and loss crisis facing insurance companies. But before we get to that, there was a remarkable sequence of events that happened starting from last week as you were warning people that the debt markets were looking ugly, and unless a major intervention occurred, it was over. And then something happened this morning. So can you start us back to what you were looking at last week and why you saw this impending crisis?
Global bond yields were spiking around the world, and global equity markets, stock markets, were selling off across the board. And again, look, just understanding the dynamics in play, nothing matters to this market except artificially suppressed rates, currency devaluation, and nothing matters. So if the Fed and central banks didn't get in here and start taking action immediately, I mean, I did a couple of videos just over the last week. I said, if they don't do something now, not a week from now, we got a big problem here. Look, this whole thing, as you well know, is teetering on a knife's edge. The debt market monster hyper bubble in debt that we have, it looks like they're going to continue to inflate it, just to continue to kick the can down the road here. And all this means is we, the people of the world, are going to be forced to deal with monumentally worsening debt situations here across the board. And central banks are in here. They're buying it all. That's their end game, and that's their goal. It allows them to inflate. I mean, it's just no coincidence that at the same time, immediately, bond yields around the world are not just falling, they are cratering. And what this is doing this morning is putting a fire underneath the equity markets, despite the fact that we got bad economic news this morning. We found out yesterday that producer prices continue to rise, and we find out today that consumer prices continue to rise, and no one saw this one coming. It was all unexpected. I mean, come on, man. But, this is, in my view, direct intervention, coordinated. I don't believe in coincidences. All these bond yields now dropping at the same time when it had to happen. If it didn't happen very soon, like I kept telling people, immediately, I mean, that's kind of like, urgently, well, it was just going to end, and they know that. They're watching the debt market just like we are.
Can you remind everyone how this mechanism works? Bond yields don't drop by themselves. They drop because of the bonds being bought.
Exactly.
Can you talk
The
about?
bonds. In other words, some entity with a lot of firepower, and I mean more than even any institution or investment bank could possibly do, is in here buying a lot of debt. And how do they do that? They create cash out of nothing, add digits to a screen, and they just get into the market and now start buying that debt. And what this does, pushes rates down, opens up a doorway to open for cash to flow into stock markets, and that's exactly what's going on right now. There's something else too. You got short covering. There was a lot of people getting short this market. I'm not short this market. I think people got to be nuts. In fact, just yesterday, I told people, I said, you got to be careful being short this market because we have no idea. This was just yesterday in my newsletter. I said, if the Fed's going to get in here or central banks are going to get in here and intervene, and here we are today. I mean, what a difference a day makes. It's an incredible thing.
You also were examining in your before market publication this morning about CBDCs emerging around the world and the principle of whatever comes out of the mouth of Washington or Wall Street, you can pretty much figure the exact opposite is what's about to happen. So what are you hearing both globally and domestically about CBDCs?
Well, the Bank of England is talking about experimenting. I love the words that they use here. Of course, they already have the system. They're looking to implement it. It's going to happen around the world. Fed President Waller came out and said, there's no need for a central bank digital currency. And then Powell is like, we're way away. We're not even close to it, which of course we all know means they're right on top of it. It's always the same story. They tell you one thing out of one side of their mouth, and that, it's all a lie. Everything's a lie. I think we all understand that, unfortunately, but we're taking action. People that are following our work, we're keeping them in the loop, me and you and other people as well. And we're working as hard as we can. I really believe that too. And the people that follow our work get it. I mean, you and me, we're preaching to the choir, even right now. We need other people. We need the people that follow our work to get other people involved here, because we are rapidly moving into a completely new system with a whole new set of rules. And unfortunately, most people are either they're blind to it, they don't care, there's no pushback. What would you expect in a society that's been conquered? We've been divided, so therefore we're conquered. And people, they can't get together on any issues to elicit change. And that's exactly where they have been placed by the forces that be here, unfortunately. But that's just the way it is. And it's sad because, again, this is a mechanism going back as far as you want to go of how the few have controlled the many forever. And we are conquered here, unfortunately, especially in the United States.
Back to that quote that you mentioned about we don't need, or there's no need right now for CBDCs. That paints a very interesting picture that all it will take is the emergence or the creation of a perceived need when suddenly, bam, this is what we told, now we need it. So lucky we have them at the ready. How many times has a crisis emerged in the past decade or two when the legislation, whether it be thousands of pages we have to pass so we can understand what's in it because but it was all made ready ahead of time. The solution is always prepared well ahead of the crisis. And then by the time the public gets informed of the crisis, boom, here's the solution. I'd like you to have a chance to crack at that before we talk about a pending crisis in the insurance industry.
It's always the same. We all know that, and everyone follows our work knows it too. These things obviously engineered here: problem, reaction, solution. Here's a problem, everyone. Wait for everyone to overreact, and we have a solution for you. And that's exactly what we are witnessing something right now in our face. Everyone knows it. Everyone knows what's coming. Everyone knows we're going to a tokenized system. The bridge in this country is being built right now, where it's going to be the crypto capital of the world. They're going to mainstream cryptocurrencies here as to allow us to accept it. And then, of course, comes the next week. This is just the opening act, what we're moving into right now. And then the crisis will, of course, hit. We're already in a crisis, a full-blown liquidity crisis on a global scale, henceforth why they continue to inflate. They can't stop. And at the same time, building the bridge into the new system here, getting people used to using cryptocurrencies as they, again, bridge us into the tokenized system. Unfortunately, that's where we're going. And the thing is, people that are following our work, they know it. Everyone knows it. But what are people doing about it? There's no pushback. Unfortunately, people have been, I said, conquered. So they just sit back and they take it. And then when it happens, they wonder what happened. I just don't understand. Honestly, human behavior is a very interesting thing. People are focused on other things right now. And we have, the political spectrum continuing to assign blame because that's what it's all about. And that's what they're going to set up to when the system actually melts down. And again, we were just on the precipice of this with the debt market because that's where this whole thing is going to begin and end. You got everyone focusing on the stock market, which is absolutely wrong. You have to focus on the debt market because that's the real issue here, and everything has become a derivative of that. And the stock market as a whole, I mean, nothing matters. Fundamental factors anymore, forward guidance, PE ratios, all this stuff that should matter don't matter anymore. It's all about artificially suppressed rates, currency devaluation moving forward. And we're going to get much more of this. There's just no doubt about it. We were promised during the campaign that that's what we're going to get. And now we have the guy to do it, unfortunately. But that's the way it's going to work. It wouldn't have mattered anyway. Whoever they put there is just a puppet anyway. But it's central banks who control the system, and I want people to start to wake up to that. Unfortunately, people don't. They still believe that in a system that no longer exists.
You've been describing the debt market crisis that we were up against last week and that just got bailed out of today, and the liquidity crisis. There's a number of banks that are really at strain because of their toxic portfolios of both corporate, commercial loans, et cetera, and underperforming bond portfolios. And in addition to that, that's just their investment portfolio crisis. But what about the liquidity crisis facing banks and insurance companies? One of the phenomenon that I want to ask you about is the term PRT, pension risk transfer. We've been reading articles since last quarter about the number of companies who are basically bailing on their retirees and saying, this is too much of a hot potato. We don't want the burden of the obligation to our retirees anymore. So we're transferring that risk of servicing those defined benefit plans off to insurance companies. So the saviors are these big insurance companies that will take over that risk. So the big insurance companies are taking over the pension risk, supposedly, from these employers who no longer want to, in this market, bubble of everything you referred to this morning, carry that burden anymore, carry that risk. So now, how solvent, how strong are those insurance companies? A new article just came out yesterday saying that it looks like there's a looming crisis in the insurance industry because they have been getting hammered with terrible losses. Some of them related to natural disasters, some of them related to horrible mismanagement of things like property protection, et cetera, by governments. We've seen that in Hawaii. We've seen that in California, still ongoing. Comments from you about the insurance, the health of the insurance company as the apparent savior of these pensions that companies no longer want to carry. And then furthermore, some of these ongoing crises that seem to be putting a lot of strain on the investments that are hurting now the insurance companies themselves, that people were hoping would be the saviors.
Well, let's just start off with this. I've been warning and screaming from rooftops for I don't know how long, trying to explain to people that the banking system is a black hole. They are all holding record bad debt. Their exposure to the debt market here is a time bomb as well. And a big part of what we're seeing now, the deregulation of the banks under the new regime coming in, the merging of with cryptocurrencies is maybe some type of a backdoor bailout. One way or the other, it's not going to work. I still say we're going to see failures here. We're going to see probably more than one major financial institution on Wall Street fail. And I've been pointing my fingers at Bank of America for a very, very long time, years as well. We just found out, this was just last week, it came out that Bank of America is holding a huge amount of bad debt with regard to the bonds. And they're all in the same boat. This is not just Bank of America. Now, with regard to insurance companies, people have no idea of how the system works, of course, and they're not supposed to know. It's not the insurance companies that are actually going to be responsible here. We're going to pay for it, and I'm going to tell you how. These insurance companies, they look to mitigate risk. So what they do is they package up their risk assets and sell them off to investment banks in the form of credit default swaps. Meaning if there is a default on the part of the insurance company, another entity, in this case an investment bank, is going to be responsible for paying those losses to the insured here. But the fact of the matter is, we're already being told who's going to be responsible for this all over the media. They're already telling us that there's no cash there. They're telling us that there's going to be a federal, bailout, money from we the people. There's no talk at all about the credit default swaps. This is how insurance companies work, and I urge everyone to look at it for yourself. Do insurance companies use credit default swaps? Google it for yourself. Yes, they all do it. So, but that's not what the people are being told. Again, they're being told that the insurance companies, they're not solvent at all. Again, the debt has already been moved out of their hands onto the investment banks in the form of a credit default swap. And just like last time, who was responsible for it? Well, we were. And we, the people, are going to be responsible again. Does anyone believe that the new administration is going to allow major Wall Street institutions to fail on their watch? Or do they believe that it's going to be, unfortunately, we, the people, who are going to bail it out again? And that's exactly what's going to happen. People better get used to it. And they better start believing that that's what they're going to see, because I'm going to tell you right now, there's no way out of it.
That's one of the things that I don't think people understand about the Dodd-Frank Act that was written in 2009 and passed in 2010, went into effect, saying that, no, unlike last time, there aren't going to be bailouts of the banks. Now they're going to be bail-ins, and it's called the Consumer Protection and Banking Act. Following the theme of what you just said earlier, is that everything that comes out of Washington is named the exact opposite of what it means. So to protect the consumer, we're going to take the money all away from the taxpayers and the depositors and use that to bail out the banks this time. Any comments?
You see the crisis that's setting up, man, look, there's no way out of it. And anyone that's hoping here that there's going to be a saving grace just because of the changing of the guard that is sitting behind the Resolute desk is grossly misinformed. Come about you because your compass is 180 degrees off of what I believe they're setting up here is a monumental crisis. And they need a reason to inflate central banks as well. Who's going to pay for all this? Well, we the people are, as we know. Where's that cash come from? We don't have it. It's going to be the Fed's going to create it out of nothing, and it goes right on to the national debt like everything else as it always does. And with regard to the economy, look, man, the world economy is contracting at its fastest pace ever on record. Meanwhile, debt is surging at its fastest pace ever here. It's a crisis in the making. It's all about liquidity. Liquidity is drying up here, going back to what we were talking about earlier here. The system is going to lock up. There's no doubt about it. They're going to offer their solution. I believe that as the economy deteriorates faster with debts and deficits skyrocketing moving forward, and anyone believing that the polar opposite is going to happen, well, you've been lied to as well, and unfortunately you believed it. No, that's going to continue as well. And as the economy continues to free fall, you're going to hear calls for lower rates, even negative rates here moving forward as the system is bridged into the new system, the new crypto system. This is where we're going. If people can't see it, that means they just don't want to see it because it's too obvious.
I'm afraid that most people feel completely blown away and helpless and overwhelmed with the magnitude and the complexity of all of this. And frankly, anything that's sufficiently complex just becomes mysterious magic, and ordinary people feel that it's beyond their ken. You have been close to this for a long time. You've studied it for decades, and that's why you, through your Trader's Choice channel, give people the benefit of your study so that they can have some insight that they wouldn't otherwise be able to get. One of the things that you said in your morning broadcast today was, in the face of these artificial, tokenized central bank digital currencies and et cetera that are coming our way, this plan that's being laid for us, this future that's being prepared for us by those in power, is to hoard real, tangible things. You've talked to, that's been a consistent refrain of yours for decades as well. Can you remind people why is so vital while they still can, while there's still a chance to make sure that their financial future of their household, their family, et cetera, is protected by intrinsically valuable, tangible things, real things, rather than these this house of cards and smoke and mirrors that we're all being, the Pied Piper is luring us off into, with people watching the Dow Jones or watching these stock markets march northward. What is it that that people need to know to protect themselves?
System is so warped right now, and it's all being built again on the back of hyperinflating debt. We must be. It's literally become survival, be on the opposite side of that trade here. It's again all boils down to the hyper bubble in debt that we have, which is responsible for the world stock markets hitting record high, as the economies of the world are contracting, as people are being completely disenfranchised from the system. So again, it just goes back to what I've been telling people for over 10 years. The implosion in the debt market is going to happen at a time of their choosing. We see what they're doing right now. They have officially, in my view, it looks like stepped in. Is it going to work? I don't know. There is a particularly dangerous pattern in the S&P 500 right now, which I just put out this morning. This falling down the stairs pattern. It's a very particular pattern that you're seeing here in the S&P 500. It doesn't mean that the selling is over. I mean, this can't just stop here. The intervention that it appears that central banks have taken to buy more debt, suppress rates, and obviously drive cash into the stock market. This can't just remain static. And the more that they do this, the more that we will see currency devaluation, purchasing power losses. So again, the mechanism here is simple. They're trying to save a drowning person by pouring more water on them, so to speak. This problem of debt saturation here, the issue really comes down to the fact that no matter how much debt they pump into it, it's never going to be enough because it's a black hole. It's a perpetual vacuum now. Being on the opposite side of that means being in real assets, hard assets, things that actually have had value for thousands of years. Now, the mechanism is very simple and people are getting upset about it. And I warned this would happen, and it has. I said that because of the mechanism involved where cash seeks yield, you've seen a lot of huge amounts of cash make its way into cryptocurrency spaces. People are angry. They say, well, hold on a minute. What's happening to my gold and silver? Because cash seeks yield is going to go to where there's the most, in the short run here, best chance of it going higher. But eventually, a debt market implosion is going to happen. We were just, and we still are in many ways, on the precipice of that. Is it over? I don't know. We did see some intervention here by central banks. They got to keep it going. Otherwise, this will implode again at a time of their choice. It's so simple. An implosion of the debt market, which is going to happen, and by design, this is no comedy of errors, why we're here, all by accident, is going to melt down stock markets of the world. And when that happens, cash is just going to make its way, as you and I have discussed multiple times, into other assets. And I believe with all I got, that it's going to make its way into artificially suppressed assets. I mean, I'm talking about gold, especially silver here. And I still say it's going to make its way to crypto as well. It's just the way I think it's going to play out here. But if I had to pick one spot to be in, I would rather be in silver above all assets. It's just the way I look at it. I want to be in something that I can actually hold in my hand that will hold value. But that's how I see this whole thing playing. Look, I've been telling people to buy cryptocurrencies for many, many years. I think that call was correct, even though a lot of people told me I was wrong and it was going to zero and I was leading my people astray. Now that we're becoming the crypto capital of the world, although Trump was absolutely against crypto. In fact, he called it a con game and everything else you can imagine. Now, all of a sudden, it's the greatest thing in the history of the world. I wonder how that just happened. Okay, I get it. Maybe he saw the light, or maybe he was just told what to say, which is more than likely the truth. As we are bridged into the system, which is, of course, a central bank creation, anyway. But besides that point, again, that's how you protect yourself from a financial standpoint here. But it's way bigger than that. It transcends so many things here, because I believe they're going to force upon us an issue with resources. Again, the debt market implosion isn't about the markets. It's about locking up the system. That's the crisis. Lock up the system, get people to react to it. In other words, you can't transact. There's no transactions. Most people swipe their debit cards, their credit cards. They can't get their cash out of the bank in a credit freeze, which was the real issue in 2008. And people have no idea. That was what was happening here. The credit markets were locking. And that's why Bernanke was rushed into Washington before a loving caring representative. And he said on that weekend, if we don't do this, in other words, pump billions into the market, into the economy right at that moment, we would not have an economy, not a market, an economy. by Monday. That's what they're pushing us into now. Another credit freeze. Everyone's fixated on the stock market, and that's the wrong place to look. I look at the debt market because it's the driver. You know that everyone who follows my work realizes it's the debt market that matters, and that's where the real crash is going to begin and end. But what it really comes down to is a lockup of the system globally, and then they're going to say, hey, guess what, guys and girls? We have a solution, but we don't want to see central bank digital system. Of course they do. They've wanted this for decades. Now they got the guy to help them sell it. The new administration coming in here, and also a proponent of negative rates. I mean, it's a no-brainer here. Why the guy got the job to do this, and unfortunately, but that's where we're going here. People better wake up, man. And I think unfortunately most people are still asleep, and they're never gonna wake up. People don't wake up generally until it's way too late, and it's already too late. If people are not already starting to invest heavily, in my opinion, okay, and use your own judgment on this, everyone listening, in commodities, especially silver, gold, then you're just gonna miss. You're gonna lose. It's amazing how many people don't understand the system, even at its most basic level. But again, who's gonna tell them besides people like me and you, bro?
Well, I was listening to you quite a bit back around the flash crash of the COVID era, that sort of thing, and you got us on the right side of those movements at that time. It can make a big difference if people do have an ear to someone who's got eyes on what's forward-looking, what's really happening, and the internals. As you said, we keep getting misdirected by looking at the major stock market indices rather than at the underlying markets or the dynamics behind those that are really driving all of this. You've kept people on the right side of that. Where can people stay connected so that they are in touch with your daily updates that you provide, and keep their eyes out for these changes happening before the herd and everybody else finds out?
Well, look, I'm an easy guy to find. You can find me on YouTube twice a day, Monday through Friday, once on Sunday. Shows like yours, obviously. And look, man, just follow somebody that you connect with. If it doesn't even have to be me, everyone out here. I'm trying my hardest as well as not again here to get this done. But, look, not everyone's going to connect with me, doesn't like my style. That's okay. Find someone that you connect with and make up your own mind about what's going on here. Just because I say something doesn't mean it's actually written in stone, but I'm trying. That's all I can do. All we can do is try to let people understand what's going on. And I want people to think for themselves, really. And people know what's going on. I tell people, use your God-given gift of intellect, man. People know the truth when they hear it. And I think people know they're being lied to, and they accept it. And there's no accountability at all. Zero anymore. And again, that's a product of a conquered society and a people who feel like they can't do anything. It's literally a mental condition. It's called learned helplessness. Look it up. This is a real thing. This is what they have done to the people of the world, especially here in the United States, I think, unfortunately. But all right, guys, that's all I really have to say about that.
Gregory, you've always been generous with your time with us, and we're grateful for this visit as well. We look forward to our next one. On behalf of all of our viewers and subscribers, thank you for joining us on Liberty and Finance.
Thanks for having me.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 13th through January 20th, 2025, while supplies last. This week we feature the 1-ounce Canadian Silver Falcon coin at just $2.75 over spot, the lowest price we've had on any sovereign coin in years. We also have 90% constitutional silver or junk silver at just $1.69 over spot per ounce. We also have the 1/10 ounce UK Gold Britannia coin at just $29.99 over melt. And finally, 1-ounce gold Canadian maples are just $59 over spot. Again, one of the lowest prices we've had on gold sovereign coins in years. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.